The text messaging part of Grower's Edge is very handy because every day I'll receive a text that shows me where the best local market is.
That's what I like about Grower's Edge too. It gives me the information I want on my smartphone so that if I'm not in the office, I still get the information that I need.
Hi there, welcome to GrainTV. It's the Friday edition, November 21st. Soybeans up sharply, wheat and corn mostly unchanged. Cody, this bean market was very volatile today. What causes the seesawing?
Absolutely. Well, I think when you look at soybeans here, it's very difficult to predict these sort of day-to-day price fluctuations. What we've known is in the last week and a half, volatility has been very high here for soybeans. So just because we traded up 17.5 here today, to me, that doesn't necessarily change my opinion on the commodity. I still think we have a little bit of overhead resistance from that trend line that was support, has experienced a roll reversal. I think that'll provide a little bit of resistance here, especially early on in the trade on Monday. But when you look at corn and wheat here, what's kind of interesting is they finished off unchanged, though they were very positive here earlier on in the morning. You know, we had nice sales here for corn with 132,000 metric tons sold. That's a nice reportable sale. Second day in a row we've had a reportable sale here for corn. And I think, you know, I think the fact that we moved up there, we hit on some resistance, ended up coming back here. But when you look at the daily dollar chart, you'll notice that the dollar rallied here as well, and I think that pressured wheat. I think that also influenced corn here. I think the bottom line is that when you look at the European Union, the monetary policy, basically the inflation over there is low enough that it opens the door for possible further monetary policy easing. Right. So that means that devaluing the euro and U.S. dollar gains strength, and I think that kind of hurt grains in particular.
Right, and wheat in particular is so reliant on being competitive in the world market for us to move that wheat, and so with stronger dollar, you know, that really could spell problems down the road as we move into the rest of the marketing year.
Absolutely, and you know, you look at Asian grain millers, and they're moving over, actually purchasing some wheat out of Canada here, mostly because Australia has experienced so much drought. Their prices are now uncompetitive here relative to Canada. So it is kind of interesting. I mean, when you looked at it, the spring wheat offered in Canada was $345 a ton. In Australia, it was $370 a ton. So you can see why Asian millers would start moving to find different sources of that wheat here. Now, Kevin, we do talk often about the cash market on Friday.
Right.
What did we see over the last week in terms of basis change?
Well, overall, the cash market was certainly stronger, both in corn and beans. Corn, in particular, had some strength on the demand side that we'll talk about, but beans really. I think we've had pretty decent movement of beans because the futures markets rallied so sharply after harvest. But beans got an extra lift this week from lower barge rates. We're at the tail end of harvest. You know, barge rates are really starting to back off. We saw a big drop this week of about 10 to 15 cents a bushel in the cost of moving barges down the Mississippi River. And so river terminals in particular you know, saw lofty gains of about 10 cents a bushel in beans. And the same was true in the corn market, but where corn got the added boost really was on the ethanol side. Those ethanol plants were really bidding it up aggressively. It was fairly typical this week to see 10 to 15 cent gains at most of the key ethanol plants. And so that has really been, you know, firming up the corn basis, shooting us higher from those harvest lows. You know, again, we talked about this yesterday, but weekly ethanol production continues to be solid. You know, we're up 4% over last year at this same time. So that bodes well, not only for using up more corn, but also for keeping that basis moving higher as we progress past harvest.
Absolutely. Kind of just some anecdotal things that I talked to with a customer, southeastern Iowa. He's talking about soybeans. He said he had just one truckload of soybeans, and he was having a hard time finding a place that would take them. That is what he was mentioning. So, you know, keep that in mind here. We have a lot of beans, a lot of corn out there, and keep that in mind, especially when you get days where we're rallying sharply higher. A lot of these fundamentals sometimes can be ignored in the emotion of these market movements and volatility. But other than that, guys, thanks a lot for tuning in. If you have any questions about what we talked about today, give us a call at 877-472-4607. And remember, take a demo of our trading platform over at grainhedge.com. You can view live quotes on a mobile platform or on your desktop platform. It doesn't matter, but the producers that we work with really like that mobile platform, being able to take those quotes out with you on the go. Other than that, have a great weekend. We'll see you here on Monday.